Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Saumen Chattopadhyay, Chief Investment Officer with Carson Group. Saumen, it's great to have you with us. Welcome to Trade Talks.
Thanks, Jill. It's great to have it here. And I think I'm very excited to share some of the thoughts on markets and macro with you.
Yes, and we have a lot to get through because as we know, Saumen, September is historically the worst month of the year. We've seen a little bit of volatility as we're just a few days into it. What variables are you going to be watching as we get through this month?
Yeah, I think the main thing that's in everyone's mind that what the Delta variant is going to do, right? Because we have had the experience of what COVID could do, what impact it brings to the market, and also how market becomes uncertain and then Fed has to fire all the ammunitions at the same time. And we have had that ordeal before. Everybody knows the drama. And we almost thought that we're out of the pandemic and now back again with the Delta variant that's spreading. There is another variant that's coming out of it. So that's the number one. I think that people are asking like what impact it will have, not only on the contact intensive industries, but overall market. And the second is we have seen an extensive earnings growth. I mean, this is like 87% of the EPS estimates made by all companies. The question is that will they be impacted based on the forward-looking projections, what Delta is going to do? We are getting into fall, the winter is coming, and there's a lot of uncertainty around that. And then the third, that with the impact of Delta variant with COVID, I think if there is a permanent change in terms of the business travel, in terms of the economic activities, and there are concerns that if businesses are pulling back in their travel, the conferences are getting canceled and things like that, will that change a permanent shift in terms of the demand, in terms of the supply side of the equation as well?
Right. Well, speaking of that, Microsoft's CEO was on CNBC today saying that he doesn't have a start date. He thinks that this hybrid environment is actually working quite well. And that's a massive workforce with Microsoft. So that's a great point that you make about business travel and what that's going to look like. But you also brought something up about earnings. It was a great quarter, whether analyst estimates were too low or companies just produced so well, right? It's anyone's guess there. What's your thought when we go into third quarter earnings, which are just right around the corner? Is it sustainable with stocks at the valuations that they're at?
Yeah, I think, and talking about valuation, we have seen the valuation bubbles before. I mean, S&P is trading about 21%, 21.4 times of its earnings, which is way above than the average. And anytime an average is a number, like, it's driven by a number on the past, the average could always change. But I think what is more concerning about what I call the diagonal dispersion, the difference between the large cap growth and small cap value. If you look at the diagonal distance between the valuation, you will see that obviously the FANG stocks, the large cap stocks are trading at an expensive valuation, and the small caps are not able to catch up. And at the same time, people are thinking, given the estimates in the market, and we have seen the rotation of style, like, large cap went ahead and then they got pulled back, value went ahead, and then the quality low ball. So there are a lot of drivers, I think, when it comes to market volatility valuation. The question is it going to sustain? I want to say that depends on the long-term trend, because we have seen a lot of cloud-based companies like Google, Amazon Cloud Services, Microsoft. They are imprinting a permanent pattern, what I call business staples. And people always thought about the consumer staples, which are pretty resilient on what happens in the market. And now we are seeing the next theme, what I call is the business staples, the companies who are basing their business on cloud-based, basing their long-term trend on the competitive advantage. I think these companies are going to make the headlines and they will sustain their earnings. Pretty positive about that.
Right. And to your point, you have the S&P 500, you have the Nasdaq 100 sitting around all-time highs. There really is a concentration of 10 to 15 mega cap tech stocks that move the indexes because of the weighting there. With those removed from the equation, what sectors look attractive to you? Where are you now?
Yeah, I think, financials obviously has a lot of play in this market. I mean, I'm leaving the real estate for a second because we have seen that real estate is a combination of the housing bubble that we have seen, whether it's a bubble or not, but it's kind of normalizing. But I think when you think about what happens after pandemic when the economy opens up? I mean, you always think about the materials, industrials, call it like, the main street factors, they are going to come and really be strong. So I think we're positive on those sectors as well. At the same time, I do not know what the Fed policy is going to be. The market has a lot of reaction on, with the dovish versus, hawkish view, and you see the dot plot, you have a lot of things like in 2023, but the market does not like uncertainty. So financials is an interesting play, I want to say. Energy, obviously, we avoid it, and then there's a big run up, and that's dependent on a lot of other factors too.
Right. Well, I think it's also going to be interesting as we get into Q4 and the holiday season, the supply constraints that we're seeing. I mean, we've heard companies, we've heard whether it's supplying, manufacturing, retail, distribution companies, that they expect it to be a challenge, and you might want to shop very early, whether you're shipping or going to be in store, because inventory remains a concern.
Yeah, so I know consumer discretionary is an interesting factor. And if you think about, there are a couple of things going on. One is people are concerned about value, inflation. In one thing, the inflation has been talked about. The CPI is like sitting at a 5.3, and people have been thinking about whether this is a permanent, inflation trend, or is it a, transitory trend that will go away after some time. And when you think about inflation and people are flush with cash, I mean, with the stimulus payment and everything else, they have a lot of cash and people have not spent it out. I would imagine that people will go and spend, but there's one underlying shift that I would like to talk about. There have been a lot of inflation with goods. I mean, if you think about, a lot of people have started buying, even with the new car, with the chip shortage. You go to any parking lot of any dealers, you won't find any cars because they're all gone. But there has been a change in terms of the consumer behavior from goods to services, which is interesting to think about, because at the end of the day, the US economy is driven by, it's a service-driven economy, right? Goods are there, but at the same time, the service demand has to be strong. And I think that's an important thing to think about, that the demand for goods, whether this has reached a high, and we are going to see a plateauing from the higher demand. And if we get into the holiday season, another thing to think about, will people shop more online, or will they go to store? Because we have seen what happened with COVID, a lot of store closing. They open with your mask on, and then the shopping experience has changed in an overall scenario, when people are thinking, I could do everything from online, and Amazon and others have gone their supply chain with the delivery, and it's just an excellent thing to think about. So that's another question mark. Right.
And one more point. Think about it, though, when it comes to a retail perspective, we have a labor shortage. I mean, how many restaurants have you gone to where there's help wanted signs everywhere? By me, there's some restaurants where they can't open on slower nights, like Monday or Tuesday. They just don't have the labor. When you go shopping in the mall, there's maybe 1 or 2 people working in each store. So it's, unemployment benefits ran out last week. No more stimulus checks. Will that inspire people to go back into the labor force? I know the COVID variant and perhaps kids being back home again, that's a big variable there. But I think a lot of this hinges too, whether it's the Fed or whether supply chain and retail looks like, it's a matter of getting people back to work too.
Yeah, I think, and this is another thing with people who have, call it, lower level of income. Like, they are driven by this propensity of demand and propensity of call of leisure propensity. In other words, that if they have been working and they got some more cash, you see that the propensity of demand is a lot more on the lower income group. At the same time, the temporary workers who have not worked for a long time, because they were enjoying this benefit, you wouldn't even find them. And after the these checks run out, the question is that, will they go back to the labor force, and are they habituated in their daily life for some time before the productivity runs up? So I think there's a possibility that we will see the dip in productivity because of this lag and before the economy opens up. At the same time, I think Delta variant, if it doesn't do extensive damage, then we will see the resurgence slowly in the economy, but the shortage is going to continue on, I think, for quite some time.
All right, Saumen, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you, Jill.